Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Wednesday, February 4th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So looking at some of the overnight headlines, the risk events, the rundown of the precious metals. So the ETFs, they're piling into that silver market, making silver great again. So the question is, will it last here? Now, looking at the April gold market, because we do have a lot of green on the screen here, specifically in that gold and silver market, you got copper pulling back a bit, platinum and palladium, they're both edging higher here with nice gains across the board in most of the metals complex. So April gold, the lows overnight, 49.30. The highs overnight here, 51.13.90. As it is recording, we're sitting at 50.73. So quite elevated, up about $137 here as of the recording, up 2.78%. The 10-day average true range. So we want to tighten it up. When you see volatility really surge and you start taking the average of things, you really want to keep it a bit closer here. So a lot of the trading platforms default to a 14-day average true range. You want to really bring that in here to about a 10-day. And it's sitting at about $260. So it's quite elevated. And you look at the gold volatility, GVZ on your platform here, it's going to be at 41 here. So most importantly, when you look at the gold market, pull up a daily chart on the gold market. You want to get at least 3 months worth of data here. Really, when you go on anything past that here, you're just taking into different economic environments and different things going on. That's why things like moving averages, when you look at the 50, the 200-day moving average, they're really not that effective when you're analyzing here current trends and things like that, because of the fact that what happened 50 and 200 days ago really is not important into what's going on here today. But you want to look and observe that we're seeing another set of higher lows on the charts, and really the base, it was established last October, and then you get that following that higher low in November and then also December. And then most importantly here, it's going to be 44.32.20 on Monday, February 2nd. That's that recent washout low that we had before we capitulated on the markets. So if you see today's rally hold, trend traders, they'll most likely re-enter this market here, anticipating another retest of that 5,400 or even that all-time high seen on January 29th, right around 56.28. So the key trend reversal point here is going to be 45.02. So you really don't want to see the market close below that, because it could fuel a greater washout down to that 4,000 mark, that 3,800 mark. And I know people don't like to talk about the downside of things, but you really got to look at this. You got to be Bruce Lee, you got to be Water, you got to look at it here from both perspectives here. You don't want to just have tunnel vision and thinking that this thing can only go up, because there's a lot of different factors that drive these particular markets. Now you look at the March silver contract, up about $6.91. That's an 8.3% rally higher here since the previous close, and we're sitting just over that 90 mark at 90.18.5, now 90.23, so $6.91 here, pushing on up with that overnight low here sitting right around $83, and the high overnight 90.43. So we're just off of that, and we actually just pushed through it as I was writing up this recording here. So the 10-day average true range for that silver market, $12.18. Now, one thing to note here is, because of the increased volatility, you're seeing a lot of the FCMs tacking on 150, 200% margin increases here on the futures contracts. So it is restricting a lot of the trading activity that's going on. And then also you do have the exchange. They've got that the margin requirements pegged to where the notional value of the contract is. So as the futures get higher in value, that notional value of the contract continues to build higher, and you're going to see the margin requirements go higher. So this really limits the upside of silver at some point here. Where is that point? 150, 200, 250, 500, who knows? But once you get so high, as long as they keep that type of margin requirements in place, is going to be a much more challenging environment. Now, on the flip side, next week they're going to launch that 100-ounce silver contract, and that'll allow people to really come back in, right size, reposition in the market. And then I also anticipate another wave of people coming into the markets. The ability to right size positionings, the ability for a lot of these dealers, these option dealers, to be able to hedge some of their gamma exposure on there. You'll probably see some of the bid offers get a little bit tighter tighter here on the silver market as you have arbitrage takes place between the options, the futures contracts in different sizes based on theoretical values and volatility. So you look at volatility on the silver market, edging higher back up to 96. That ticker is VXSLV. And the dip buyers, this is where I really was, I'm drinking my coffee, watching and reading through all the data that I see on the Bloomberg terminal, and I about spit my coffee out when I saw the big jump here on those ETF inflows. So the dip buyers, they really emerged after 8 straight days of ETF outflows, but it's really going to take that move over the 101 level mark, I think, to trigger the panic buying in the market that we've seen before, and a break below 73. Well, that would be another devastating move to the bulls. But when you look at the ETF flows, they were selling gold, they were selling platinum, and they were selling palladium yesterday, and they were buying silver in a big way. So looking at gold first here, the exchange traded funds, they only added about 17,000 ounces of gold to the holdings here, and those total gold held by ETFs rose about 1.4% this year to about 100.3 million ounces. Now gold is up about 15% this year coming into this recording, so tacking on about another 2.8%. So we're sitting at about 17.8% this year and rising about 6.1% in yesterday's trading session. Now silver, this is what I'm watching here. The ETFs added, brace yourself, 31.8 million troy ounces of silver to their holdings in the previous trading session. That's the largest one-day increase since February 2nd, 2021. I wasn't keeping track of that data back then here. We were looking at other things. I think it was a lot of the panic buying in the markets, the COVID fears, a lot of small cap buying, a lot of rotation going on in those markets. So the ETF flows weren't really relevant at that point. But the point is that we do have that biggest one-day increase. So you look at year to date, the ETF flows, they are still negative at minus 1.6%, but it was a 3.9% jump yesterday. And it comes after 8 straight days of decline. So really people coming in and reinvesting into this silver market here. Now you look at the gold silver ratio, 56-1. About a week ago, we were at 46, 47-1. Something to note on that is that we have seen a lot of geopolitical tensions really stepping up here. So you're seeing gold come back into play. And also I talked about how central bank buying really most likely occurred because of the fact that it's under Basel III reform. It's a tier 1 asset. So central banks really like holding gold because of the fact that it's the equivalent of cash or some high yield bonds. Now you look at the broader macro markets here, the thing to watch on the flows when you get into the equities is really look at the NASDAQ, look at the Russell 2000, because they've got very different pictures here. And one thing, if you note for me, is that I've been a bull on this Russell 2000 for quite a while now. You've had a nice breakout after the April lows. You start looking at when the Fed started cutting rates. You saw that optimism really come out around small businesses on those NFIB index. And you're seeing that what's happening is the hyperscalers, the large companies, the ones with all the money out there, the Mag 7 and things like that, they're really developing the AI and they're spending all the money, the CapEx spending on it. And who's benefiting from it is the small businesses that are able to take and adapt AI where they only have maybe a handful of employees, or they can only do so many processes in a day. They adapt some AI into their businesses, and next thing you know, the 5 to 10 man operation is working like 2 or 3 or 4 individuals. I've got several different AI platforms running in the background, and it allows me to utilize a lot more tools that I wasn't able to utilize 3 and 5 years ago from today. Now you look at the Russell 2000 earnings, they're really starting to accelerate, and they're out accelerating like the S&P 500. So what you're seeing is that the NASDAQ's got all the spending, they've got the CapEx spending. Will it deliver? They're also out and they're developing these processes that are really taking out some of the competition and taking out some of the different sectors out there, which are being replaced by different AI initiatives. Now, if you look at things like the S&P 500, again, you're seeing that out of the 214 S&P 500 companies that are reported so far, 80% have managed to beat those analyst forecasts, 15% have missed. We will have earnings from Alphabet and also Qualcomm following today. Now, Bitcoin futures, unable to really get much steam to the upside here. And you're seeing a lot of different, traders, you're seeing institutions. We'll see if this has any kind of contagion effect on companies that were building those treasury reserves, the Bitcoin reserves, the crypto reserves, because there's a lot of pressure going on. Since the start of this week, you've seen almost $500 billion wiped off of the current cryptocurrencies. So quite a bit of pressure there. And it seems like no real rally here taking place whatsoever in that market. People would much rather be in other markets that are generating alpha and performing to the upside, like the Russell, like the silver market, like the gold market, and some of these other outside currencies. Now you get to the CME, the Fed watch tool, the rate cut expectations. We're not really seeing much activity there. Markets are only looking at about a 9% likelihood that the Fed will cut rates at March 18th. It's closer to a 60% chance when you get to the June 17th meeting. You'll get the dollar index kind of stabilizing here, sitting at about 97.46. Not too explosive to the upside nor the downside, more consolidating, waiting for more data. The euro currency sitting at 118.29. WTI crude oil futures, that's one that's getting a boost here, and it's a lot of the geopolitics coming out, a lot of the demand, a lot of the rhetoric that's taken place around OPEC. So you're seeing crude oil futures edge higher here at 63.42, really holding above that 60 mark here in his bullish trend. 10-year treasury yields remain right at the top end of the range here at 4.29%. And then you look at the volatility index here, which is slightly lower here, down about 1.22% at 1868. Something to watch here is that the tactical resistance one that I put out on the markets here, and it's another algorithmic, takes into some volatility adjustments over the past several trading sessions, some of the price action here, and it really indicates that the possibility of the VIX getting up over 20 at that 2016 level, where you would see a small pickup in volatility, is possible in the markets. So Bitcoin sitting at that 76,000. S&P Gamma exposure is a bit negative, indicating the possibility of that slightly higher volatility. So again, keep an eye on the VIX here for any push above that 20 mark. Now you go to Europe and Asia, those stocks, they were slightly higher in Europe, and the Asian stocks, they were steady after overcoming their early declines, with the MSCI Asia Pacific Index just a little change after falling about 0.6%. So, I've been under the weather the last few days, went to bed at like 8 o'clock last night. I feel like a champion today, so we'll see how that goes. Other markets here, a bit of red on the screen on the grain markets, bit of mixed picture on some of the currencies. And then, of course, you got your equities. You're going to have those earnings front come out later today. So if you guys got any questions, you want to open up an account, if you want to get an account set up before the weekend here so you can prepare to start trading into that 100-ounce silver contract, and then also a lot of the spreads on the options have really come back in. When you look at the silver market, I laid out several different kind of lotto ticket trades over the past 6 months in the silver market that have frankly done quite well. I mean, it's quite impressive, the run up that we've seen in silver, 265% gain over the last 12 months in the silver market. So we want to watch and see if it could break through that 100. I think that's where it really triggers the FOMO. Could be another quick move up to that 114, 120 mark. And then we'll see what happens when we get up to that level here. We'll see if there's any curbs in place by China, by other exchanges around the globe. So again, you got any questions, send an email to info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.